Good morning, everybody. We have a mixed trade in the grain markets here early on Tuesday morning. It is 6:30 a.m. Central Time. December corn futures down 3.5 cents at 529.5. November soybeans are up a quarter cent at 1350.5. September Chicago wheat down 7.75 at 633. September Kansas City wheat is down 9.75 at 605.5. September spring wheat down 3.25 at 854. If you guys are listening on the podcast, as always, really appreciate it. Leave me a rating, leave me a review. If you are watching on YouTube, make sure you subscribe to the channel and make sure you hit that like button. Help me to continue to do this and continue to keep this channel growing. If you need some additional assistance from me and you need some more detailed information about grain markets or grain marketing, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan in the upper right-hand corner. For $49 a month, I offer a subscription service. It includes my morning email, which goes out every business day at 6:30 a.m. Central Time. That includes every overnight headline that you need to be aware of, all sorts of interesting charts, graphics, weather maps. There's a text message service that goes along with this. Subscriber-only videos are something that I've been doing every single business day, and they go out to subscribers via text message. They cover everything from USDA reports to grain marketing, my thoughts on the markets, all sorts of different things. Sunday weather videos are something I've been doing this summer. This is a monthly deal, can be canceled at absolutely any time, no other fee, no other obligation. Certainly check that out. So we had a USDA report yesterday, and the report was kind of a mixed bag. Surprisingly, the big surprise and the big bullish surprise was in the wheat, and we haven't seen a whole lot of that from USDA in regard to wheat in recent years. But the culprit was a lower spring wheat production number, or lower than expected. USDA pegged other spring wheat production at 345 million bushels, which was more than 100 million bushels below the average trade guess. So that was seen as being a positive, not only for spring wheat, but for the winter wheat markets as well. The Kansas City wheat futures, as an example, went up and filled that chart gap from July 6th. The spring wheat market made some fresh contract highs overnight. Trades a little bit lower here this morning. But that spring wheat number, if realized, 345 million bushels for other spring wheat, that would be down 41% from last year. So just an absolute crop disaster being projected here for spring wheat. And that's a number that may get worse before it gets better. I think that crop in North Dakota and other northern states is beyond repair here. Now, when you look at what happened on the corn and soybean balance sheets, there was really nothing earth-shattering. Some of the demand numbers moved around a little bit. USDA used its updated June acreage number for corn, which resulted in a higher production number. But USDA did not change the corn and soybean yield numbers yesterday, and they typically don't make adjustments in July. So look for those yield adjustments to the corn and soybeans in the August report, which will be out on August 12th, I believe, which I think is a Thursday at 11 a.m. Central Time. So we've got to wait another month for yield adjustments. Now, speaking of crop conditions, we did have our crop progress report out yesterday. Corn ratings improved, 65% good to excellent nationally, up from 64 last week, 68 on average. States that saw improvement in corn ratings last week include Iowa, Missouri, South Dakota, Minnesota, Wisconsin, Michigan, Kentucky, Tennessee, and Pennsylvania. Illinois notably declined 5% on the week and is only rated 60% good to excellent. That's kind of a head scratcher. If Illinois is only rated 60% good to excellent, I think a lot of people probably need to change their yield numbers around. That one's kind of a head scratcher to me because I've been told and I've seen that crop's in very good shape the way it seems. The crop is 26% silking nationally versus 10 last week and 30 on average. 3% of the corn crop in the dough stage nationally, up from nothing last week, 3% on average. Soybean conditions unchanged, 59% good to excellent, unchanged on the week, below the 65% average. 46% of that bean crop blooming versus 29 last week and 40 on average. 10% of the bean crop setting pods nationally versus 3 last week and 10 on average. Spring wheat ratings still terrible. So spring wheat ratings were unchanged in the good to excellent category at 16%, way below the 65% average, of course. The amount of the crop rated poor to very poor increased to 55% from 50% the week prior. So that poor to very poor rating increasing. A lot of people just look at the good to excellent ratings, but in this case, you've really got to look at that poor to very poor category, which may tell you actually more about the crop. The crop is 83% headed in spring wheat versus 69 last week, 81 on average. U.S. winter wheat crop, 59% harvested, up from 45 last week, 65 on average, making some progress here certainly, but behind average by just a little bit. A lot of states are more than 80% done. Texas, Oklahoma, Kansas, Arkansas, Missouri, Illinois, California, and North Carolina, more than 80% done. Your states up in the Pacific Northwest typically drag down the average relative to those states that I just mentioned. The Corn Belt should be wet this week, although there is some drier weather in the forecast. So if you look at the 7-day map from the Weather Prediction Center, it's pretty wet for a lot of the Corn Belt. There's a lot of areas that are going to see some rain. But when you go out past, say, this weekend, I'm not really seeing much in terms of rain in the forecast. I was looking at the GFS run this morning, and once you get past this weekend, there's really not much in terms of like a big system or anything that rolls through the Corn Belt. So you're looking at below normal precipitation for the vast majority of the Corn Belt for the 6 to 10 and for the 8 to 14 day period at this point. And a lot of the Corn Belt is going to see above normal temperatures, especially in that 8 to 14 day period, which is probably bad timing for soybeans in particular. I would make that argument here. Now, these forecasts, of course, being extended to some extent, they're a little bit further out. I don't know if the market is going to take this extremely seriously or not, but that's something to be aware of. Corn shipments have softened up a little bit. We were below 1 million metric tons last week, 993,000. That's the lowest weekly total, I think, since January. That's below what we need in order to hit USDA's target for the marketing year. Soybean shipments are also running below where we need to be. So you may very well see the government reduce its old crop export numbers for corn and soybeans moving forward. Tomorrow is last trading day for July grain futures. If you have any remaining positions there, make sure you take a look. Cattle market finished marginally higher in fat cattle, lower in feeder cattle yesterday. Kind of a back and forth deal. We'll see what develops here today. In the outside markets, we've got the S&P up a 1/4 point. The Dow's down 30, pretty quiet there. Gold and silver are mixed. We've got the bonds just up a couple of ticks. Crude oil is up 15 cents in the August WTI at 74.26. Everybody have a wonderful day today. I will talk to you same time tomorrow.